Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock and Sofi Technologies SOFI stock. So for the latest Palantir news updates, we have Palantir being selected for a $90 million contract, which is going to last around 5 years with the HHS. So this is already a good start for Palantir Technologies before their earnings report, which is going to be on May 9th, and this will also add to their revenues over the next 5 years. Then we're going to move on and talk about Sofi Technologies and how Sofi Technologies is set to outpace the overall stock market in the future, which could be fantastic news for SOFI stockholders. And then lastly, we're going to compare Sofi Technologies to American Express to determine which one is the better buy for investors right now. So for more Palantir and Sofi Technologies news updates, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. So if you didn't know, Palantir Technologies, ticker symbol PLTR, is a leading builder of operating systems for both commercial clients as well as government enterprises. Right now, the current stock price for the PLTR stock is trading at around $10 per share, while the high-end analyst price prediction for the next 12 months is $25. However, clearly, due to macroeconomic factors pulling down growth and technology stocks, there is a chance that we are not going to be able to see $25 per share, which means that the more accurate price prediction will be between these two, either at $15 to $17 per share. But right now, Palantir Technologies has good news coming out about it because they were selected by the Department of Health and Human Services, also known as HHS, for a 5-year contract. And this contract, like we said earlier, is worth $90 million, which is absolutely fantastic. This means that Palantir is continuously expanding their overall contracts, which in turn will increase their revenues, it will help them generate more free cash flows, and hopefully it will increase their overall stock price as investors determine how to price the PLTR stock during this very volatile market right now. Palantir's main objective for this contract is going to be to deliver high success rates of data-driven outcomes and decisions that will be made by various people throughout the HHS organization. The president of Palantir USG says that we are grateful for our continued partnership with HHS and the confidence in our software it is showing by selecting Palantir for a long-term, wide-ranging BPA. He goes on to say, "We are proud to provide the software backbone to some of the country's most critical public health missions." So overall, this is fantastic news for Palantir Technologies, and it shows just how much Palantir's platforms are actually worth. The HHS will be using Palantir's Foundry platform, which is going to enable data-driven decisions by integrating data from siloed data sources, which basically means this company generates a lot of data, and Palantir's Foundry platform is going to interpret that data to where a human can actually look in to make future projections about the given data. This type of technology has already been implemented and is currently being used at the National Institutes of Health, the Centers for Disease Control and Prevention, and the FDA, which is the Food and Drug Administration. So overall, this is absolutely fantastic news for Palantir Technologies. So this is a clear win for the PLTR stock, at least for the short term. However, I don't think that this is going to be a positive enough catalyst or news story that will actually take the PLTR stock any higher, because the overall macroeconomic environment is so bearish and negative right now that news like this is just going to slide under the radar. But with that being said, let's go over and talk about Sofi Technologies and how it's going to start to outpace the stock market according to this particular author. Right now, the SOFI stock is trading at around $6.40 per share, which means that the company has lost around 35.21% of its value just in the last month, and this is due to major growth stocks being pulled back right now, particularly in technology and finance, especially the business services sector, which has lost around 8.81% recently, which is a huge drop for an entire sector. And on top of this, the overall stock market benchmark, which is going to be the S&P 500, has lost around 8.48% recently, which is absolutely huge. However, despite this decline, investors are actually anticipating an increase in the SOFI stock in the next couple of days to actually outpace the market. And this could be due to their upcoming earnings report, which is going to be released on May 10th of 2022. However, according to Zacks Ranks, they actually call for earnings for the entire year for Sofi Technologies to report a loss of 42 cents per share and revenues of around $1.48 billion per share. This would represent a positive positive development of 58% and 50% respectively. So overall, this shows that SoFi Technologies is rapidly growing. However, on the other hand, analysts are also very bullish on the SOFI stock and SoFi Technologies as a whole, which has been noted by a multitude of investors. However, Zacks Rank in particular actually does not see upside potential in the SOFI stock price, at least in the short term, because according to their proprietary ranking system, from 1, which is a strong buy, to 5, which is a strong sell, they say that the SOFI stock, which is SoFi Technologies ticker symbol, is actually a strong selling opportunity right now, which I personally disagree with. I think it's good to buy high growth companies on weakness, which just lays out the future of future stock price appreciation. But how does SoFi Technologies compare to other companies such as American Express, ticker symbol AXP? Well, American Express is a credit card king, and they can be likened to either Visa and or MasterCard because all of those companies have very strong consumer satisfaction ratings, while on the other hand, SoFi Technologies focuses on different segments in the financial industry. However, they do also offer credit card products, loan products, as well as other financial products and or services. So it begs the question, which one is a better buy? American Express, ticker symbol AXP, or SoFi Technologies stock, ticker symbol SOFI? Well, let's actually find out. So we're going to start with American Express, and American Express had major revenue declines throughout the last couple of years. However, the company did remain profitable, and in the first quarter of 2022, their sales jumped by around 29%, and this has been fueled by people buying more things with their credit cards, and an increase in consumer spending with their credit cards is very good for American Express. Management of American Express has also confirmed that the revenue growth goal for this year is going to be between 18% and 20%, which is absolutely phenomenal, especially for a company the size of American Express. The chief executive officer of American Express even said that the company's investments in critical areas are going to boost its long-term growth. This would include customer acquisition, engagement, and of course customer retention. And with the company's very high customer retention rate, we can anticipate that the stock price is going to continue to rise. So by looking at the stock right here, we can see an absolutely phenomenal uptrend in the stock. The current stock price is trading at around $172 per share. However, the high-end bullish price target by analysts in the next 12 months goes as high as $230 per share. Also, we can see from the stock chart that this has had a fantastic couple of years following this very aggressive growth line, and I anticipate that this growth line is going to continue to increase throughout the next couple of years at a very steady rate, which is fantastic news because this is not only going to be a very safe stock to invest in, it's also going to be a stock that is going to give you growth despite the current stock market environment, which is very negative right now. However, now let's switch over to another growth company, which is going to be SoFi Technologies. And normally when we talk about growth companies, particularly newer growth companies, you have this risk to reward with high growth equals high losses, especially as the company starts to ramp up its overall products and the spending that goes along with growing the company in general. SoFi Technologies also ranks as one of the best fintech or financial technology companies on the stock market right now, and although the stock price is falling because investors are liquidating their stocks due to the current stock market environment, the overall company is still growing. I want to quote a portion of this Motley Fool article, which says, "The number of new members increased 87% over the prior year to 3.5 million, which was a 39% larger increase than in the third quarter. New products increased 105% year over year, and they were heavily skewed towards financial products rather than credit products. Fourth quarter revenue increased 67%, and full year revenue increased 74% year over year to a record $1 billion, end quote. So all of this is absolutely fantastic. They are growing their revenues by a 45% compounding annual growth rate. They are tripling their EBITDA, and they are doubling their overall margins, which means that this company is absolutely experiencing explosive growth right now, even though the current stock price doesn't show that. However, the negatives about the company, which we have gone over before, is that the company did have to cut their revenue and earnings expectations for the year of 2022 due to the extension of the student loan moratorium, where former students don't have to pay on their student loans. This has caused Sofi Technologies to lower their revenue guidance from $1.57 billion down to $1.47 billion, and it also slashed their EBITDA down from $180 million to $100 million. Despite this, analysts are still pretty bullish on this stock because the high-end bullish price target for the company is $22, even though right now it's trading for around $6 to $7 currently. So investors could take this massive sell-off in the SOFI stock price as a fantastic buying opportunity as long as they are not already overexposed to this company. You don't want to take on too much risk. There are plenty of other good growth stocks right now. I personally just like Sofi Technologies because I think this company is going to be phenomenal if you are willing to hold it throughout the next couple of years. So which company is better, American Express or Sofi Technologies, to buy right now during the current stock market environment? Well, both companies are really good companies in my opinion. However, one is safer and one is more stable, and it really just depends on what type of investor you are. I personally own both of these companies in my portfolio, but I would say that risk-tolerant investors who are willing to hold Sofi Technologies for the long term could get much more payoff from Sofi Technologies than American Express. However, because the current market conditions are so bearish and negative right now, American Express, in my opinion, is going to be the better buy because it is the safer buy considering current macroeconomic factors. But I would love to hear your thoughts down below. Remember to go and smash that like button right now for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.